Hello, friends. Very good afternoon greetings to all of you. So, here I, Kunal Nagpal, once again welcome you back to our great economic session. Dear guys, today's economic session is really going to be very interesting. We are basically going to discuss the core aspects of the Indian economy pertaining to the fuel industry. That is, how India is filling its fuel tank amid ongoing global energy crisis. And this is extremely vital in today's context because today's global energy crisis and the overall global economic environment is actually going through a very troublesome period, because of which the intensity of the crisis is increasing with each passing day. So how is India being able to manage and survive through this crisis? How is it actually being able to fill its own fuel tank is the major area of concern, and we are going to explore this particular aspect at our best possible level. Next, we are also going to consider the automobile industry of the Indian economy. That is, we are going to consider that how are the automobile sales growing in India but at a slower pace. So why the automobile sales are expected to grow at a slower pace is the major area of concern as well. So let's start today's discussion with the basic philosophical content. And the theme of this philosophical content is to give. Giving is such a beautiful dictionary word, and its meaning is extremely divine. It carries such a philanthropical idea with itself that fulfills the basic goal of the humanity. When God sent man to earth, he sent him with a command, give. Man is meant to be a giver. We must give all we have, that is our time and talents, our experience and wisdom, our influence, our wealth, our life itself to those in need. It is only then that we will experience Anand, the joy that knows no ending. We make a living by what we receive, but we live a true life by what we give. That's why its entire stature is so great in the overall mythological concept, and it's the basis of a contented life. There are basically three types of giving. The first kind of giving is like the flint, two pieces of which have to be rubbed together over and over again in order to emit a tiny spark, and that is actually the forceful giving. The second is akin to a sponge which has to be squeezed till the last drop of water comes out. And the third and the best form of giving is like a honeycomb from which the sweetness freely oozes out. And that's the smoothest form of giving, the desireless form of giving. Such unrestricted and overflowing giving, which is truly unconditional, is actually the true form of giving. A beggar once came to the door of Mr. Thomas Carlyle when he was a boy. His parents were not at home and he was in a dilemma. He did not want the beggar to go away disappointed. So in his boyish enthusiasm, he rushed to his room and brought out his piggy bank. He smashed it to pieces and handed over its entire content to the beggar. On recalling the incident, Mr. Carlyle said that never before had he experienced such bliss and satisfaction. Such is the inexplicable joy of giving, which is truly unconditional giving. Sadhu Vaswani often said, I have but one tongue, but even if I had a million tongues, I would but utter this one word, give, give, and give. This is extremely divine message which this article is carrying. And I hope all of us implement this particular concept in our lives at our best possible level and implement that third type of giving in every aspect of our lives. Now let's begin with today's economic session. Now, let's focus on the fuel industry of India, that is, how India is filling its own fuel tank amid ongoing global energy crisis. How well has India responded to the world's first truly global energy crisis that unsettled the markets, sent prices to record highs, and created shortages in many places? Given the scale and complexity of the crisis and the shortcomings of the market, the government stepped in to cushion the blows on consumers. The imprint was visible on the way the refiners sourced crude to what drivers paid at the pumps. When international prices flared following the Russian invasion of Ukraine, the government of India responded with a duty cut. That was actually not enough, and both pump prices and fuel taxes remained high. Taxes comprise about a third of the petrol and diesel prices today. So in order to protect the customers and the final consumers, the state-run fuel retailers ended the price alignment with the international market and have not revised the domestic rates since April. This had two short-term unintended consequences. Firstly, the heavy losses at fuel retailers and dry outs in some pockets during the summer. So these two unintended short-term consequences had a lot of implications for the entire Indian economy. Indian Oil, the Bharat Petroleum Corporation Limited, and the Hindustan Petroleum Corporation Limited, that is HPCL, have reported combined losses of 21,000 crore rupees in the first half of 2022-23. The private fuel retailers, who control a tenth of the country's pumps, were unwilling to sell at a loss. This suddenly brought the burden of supply solely onto the state-run fuel retailers, who were not prepared for that, hence leading to the dry pumps and long lines for some days at several places. The long-term effects of the price freeze, however, can be far more consequential in comparison to these short-term consequences. It could mean the private sector stays peripheral to the domestic fuel retailing business, with state-run complexities maintaining their dominance. Given the expectations of the deep market uncertainties over the current decade due to energy transition and possible global reorder, the government might also consider it prudent to maintain the dominance of the state companies for larger leverage over the local markets. The price freeze shook the private sector's faith in the reformist agenda of the government, which had over the last few years eased many restrictions to attract the private investments to fuel retailing, increase competition, and improve the quality of customer service. Another likely casualty would be the divestment plan. The chances of selling the BPCL to the private investor has further diminished. Rising prices also hurt the Government of India's plan to eliminate the cooking gas subsidies. The government compensated the companies for the losses they incurred in selling the cooking gas at below market rates. This was a departure from the practice of directly transferring the subsidies to the consumers' bank accounts. Imposing a windfall tax on domestic crude and on the export of petrol, diesel, and jet fuel was another key government response to the crisis. This upset the investors. The new tax took away a large share of the extraordinary gain refiners were making on the fuel exports, but still left them with the margins significantly above normal. For the domestic crude producers, however, the price realization after the tax has been close to normal. India has surplus refining capacity, but its crude output has been falling for years, and foreign investments have mostly eluded the upstream sector. The windfall tax basically exacerbated the worry among the foreign investors that the government could intervene at will to change their returns on investment. The government of India played a major role in the crude import by exposing the deceptive morality of Europe, which continued to import the Russian oil while pressing others to stop buying. So, by purchasing more Russian oil, India helped calm the global prices, with the share of Russian oil in the Indian imports climbing to 20% from negligible proportions last year. India's crude basket became more diverse actually. India's tiny strategic petroleum reserve inhibited it from tapping it to the influence global prices as part of a massive exercise by buyers led by the US this year. Importing 87% of our oil needs makes us vulnerable, and we need a substantially larger SPR, that is the Strategic Petroleum Reserve, for our energy security. The natural gas prices have become another headache, that is the major headache this year, with Europe willing to pay crazy prices to attract liquefied natural gas cargoes from all over the world to make up for the diminishing Russian supplies. India's consumption fell as the spot purchases dropped after Russia's Gazprom refused to honor its long-term gas supply contract to India. Many factories had to cut operations. The domestic gas price also spiked as it's linked to the international hubs. The government responded by setting up a committee which has recommended a price band for the local gas. The global crisis provides India an opportunity to re-evaluate the goal of more than doubling the share of gas in its overall energy mix, while currently depending on the imports for half of its needs. Second, it also requires us to figure out the robust ways for dealing with the global volatility. Hence, it basically teaches us the lesson to take the global crisis as a wonderful opportunity for us, that is the opportunity to re-evaluate the goal of more than doubling the share of gas in the overall energy mix of India, while currently depending on the imports for half of the needs. Second, it also requires us to figure out the robust ways for dealing with the global volatility. So, the key takings from this particular write-up is the government of India played a major role in crude import by exposing the deceptive morality of Europe, which continued to import Russian oil while pressing others to stop buying. So, by purchasing more Russian oil, India helped calm the global prices, with the share of Russian oil in Indian imports climbing to 20% from the negligible proportions last year. India's crude basket has actually become more diverse. So, this is how India is managing to fill its fuel tank amid the ongoing global energy crisis worldwide. Now, let's focus on the automobile industry of India. The automobile sales are expected to grow, but at a slower pace. India's automobiles market is basically expected to see an increase in the sales across the segments in 2023-24, albeit at a much slower pace after bucking the declining trend globally this year. The fundamentals that have supported the growth in the past couple of years will continue to hold for next year, according to the credit rating agencies and brokerage firms. The automakers are basically keeping an eye on the potential dampeners such as a persistent high inflation, price increase on the back of the regulatory changes and higher borrowing costs, notwithstanding a robust order book of nearly 750,000 units of the passenger vehicles as on November 30, said the industry executives. The sales growth is actually expected to moderate to mid-single digits from high double digits this fiscal year, owing to the high base effect and easing of the pent-up demand. Brokerage Nomura has forecast the sales of 3.83 million passenger vehicles in 2022-23, up 25% from 3.06 million units in the previous fiscal. Nomura has basically projected the sales growth of 6% year on year to 4.06 million units in 2023-24. The demand for the sports utility vehicles, that is SUVs, electric vehicles, that is EVs, and the premium models will basically remain strong at the cost of the entry-level models, which are likely to be more impacted by the expected price hikes due to the regulatory changes. Segment-wise, for the passenger vehicles, we now expect the industry volume growth to slow down from minus 25% to slow down from approximately 25% in the financial year 2023, and previously it was nearly 21% to approximately 6 or 8% in the financial year 2024 and the financial year 2025. Nomura research analysts Kapil Singh and Siddharth Bera wrote in a recent report. So I repeat their statistics once again as they are extremely important. Segment-wise, for the passenger vehicles, we now expect the industry volume growth to slow down from nearly 25% in the financial year 2023, previously it was 21%, to 6 or 8% in the financial year 2024 and 2025, respectively. They said, however, that those with the higher exposure to the electric vehicles will continue to see a strong operational performance. The sports utility vehicles, that is SUVs, accounted for nearly 54% of the total passenger vehicle sales in the first half of the current fiscal, according to the Society of Indian Automobile Manufacturers. The two-wheeler market, which actually saw a protracted slowdown since 2018 owing to a combination of factors such as the poor rural demand, price hikes led by the regulatory changes and inflation, has seen a nascent recovery but is expected to see the growth taper off. The credit ratings firm CRISIL expects a normal monsoon coupled with improved model availability and EVs to drive the two-wheeler volumes in 2023-24, albeit an estimated lower pace of 11 to 12% compared to a likely 21 to 23% in this fiscal. The next fiscal year is also expected to see the slower growth for the commercial vehicles, particularly the medium and heavy commercial vehicles, that is the goods carriers, which have their fortunes tied to the overall economy and the industrial growth. ICRA estimates the segment to basically grow 10 to 12% in the financial year 2023-24, down from 15 to 20% in 2022-23. It also expects a softening of the demand for light commercial vehicles. The electric vehicle sales, however, are expected to surge as the various manufacturers launch the models and the segment continues to receive the policy push. Nomura expects the EV penetration to reach 3% for the passenger vehicles in 2023-24 against 1.6% estimated in this fiscal. So this is actually a positive estimation, that is the penetration for the EV passenger vehicles to increase from 1.6% to 3%. So this wonderful write-up about the automobile industry for the Indian economy, which shows that the automobile sales are actually expected to grow but at a slower pace. So the India's automobile market is actually expected to see an increase in the sales across the segments in 2023-24, albeit at a much slower pace after bucking the declining trend globally this year. So this does not mean that we are not having the strong fundamentals in the automobile industry of the Indian economy. It simply means that the global headwinds are impacting the automobile sector of India. So this is the basic takeaway from this particular write-up. So dear guys, I really hope that this session must have been able to help you to actually enhance your knowledge base with great insights pertaining to the fuel industry of India and the automobile industry of India. Both sectors are actually correlated with each other if we consider the economics of the Indian industry, of the Indian economic sector, Indian automobile industry, Indian fuel industry. So that's all for the day, dear guys. That's all for the day. And I really hope to see you next. And until then, take very good care of yourselves. Namaskar. Jai Hind.